Well, Telus stock is up today as the company hits pause on its dividend growth plan until it says its share price reflects its growth prospects. For more on this, we're joined by Doug French, Executive VP and CFO at Telus. Doug, thanks very much for joining us.
No problem.
Let's talk a little bit about that. You raised your dividend last month, and then yesterday you announced the pause. What's the rationale for this?
Yeah, our share price had been under pressure, and the dividend yield had increased to a level that we believed warranted then the pause on the growth. We don't believe the share price currently reflects our growth trajectory, and with the yield being higher, we did the pause until the recovery of that share price occurs.
Now, investors had some concern about that. Is that where that's coming from?
There were certain investors, but we've had a very clear, consistent plan on how we are going to deleverage, remove our discounted DRIP, and continue to execute as we have on our operational execution. And so we believe, some of the interpretations are not aligned with where we believe our organization is going.
And just first with the pause, how long is that pause? Any idea?
No, it's to be determined. I think we'll wait and see when the yield is more reflective of the value that we believe our organization will contribute. And so it'll be up to our board to decide with management when we will put the growth back on. But right now it is there is no set date.
And with the DRIP that you mentioned, why not just remove it entirely?
We have had significant expenditures over the past few years on spectrum. We've also led the industry in our fiber build. And so the step down of the discounted DRIP is to, in essence, complete our free cash flow maximization, I'd say, in the short term, as we pay for some of those significant investments. But we were very clear, very transparent on our approach to do that, while deleveraging to 3.0 of debt to EBITDA in the same time frame.
And any concern about investor reaction to it?
I think the reaction yesterday and the reaction that when we be reaffirmed where we were headed was very positive. I think we're seeing a lot of support for our organization with institutions. A lot of even the analysts and the Canadian analysts, which are following, have all got buys and target prices on us in a significantly higher than we're currently trading at. So I think it's now we just need to continue to execute and show exactly what we are doing back to the markets. But I do believe the announcements we made and the confirmation we've made over the last 24 hours is just reaffirming the trajectory we were on, and it was well received by shareholders.
And also, you announced today that you're repurchasing a series of outstanding bonds for cash. This is the latest one. There have been several this year. Where are you heading with that?
Yeah, so there's certain of our bonds that are trading at discounts, and it just gives us an opportunity to purchase some of the debt back, and it's part of our deleveraging plan. So that we will be down to that 3.0 leverage level in 2027. And so it's all part of our comprehensive plan to do that.
And one of the things people have been, there was a story on a little while ago, copper, and people don't necessarily think about it. There was talk you had up to $1 billion possibly in copper waiting to be harvested from your lines. Where is that now with copper prices sitting at closing in on record levels, around record levels? Has a lot of that copper been salvaged, or are you waiting?
So we call it urban mining. We've been mining our fiber or our copper as we complete our fiber builds. We can remove the copper when all of our customers are off it. And so there is a bit of a migration to our fiber network. Our fiber network is leading edge. We have a market coverage that is probably one of the leading in the world on one of the best technologies, if not the best technology for delivering internet, which has allowed us to free up that copper. And so I would say we're still in our infancy. We've probably only been little less than 10% of the copper we have has been able to be monetized to date. but it's going to be very steady over the next few years in the monetization opportunities.
And one of the other things that people are talking about, AI, of course, where are you within AI and how are you using it and what kind of do you see savings? Are you starting to see savings with AI?
Absolutely. So we've been putting in AI agents throughout our organization to improve customer service and improve effectiveness. We have our own data centers, and we are also selling to our customers solutions of GPU sales in addition to helping them develop their own AI agents and train their models. And so we've been able to do both fronts. One, utilize it for our own efficiency, for our own customer service and improving time in which our customers spend through administration work with us. And then in addition to selling similar solutions or solutions to our customers that allow them to do the exact same thing on our wholly owned data centers.
And how has that been going with the data centers? We've heard some struggles for some people. How the build out's been going for you?
It's been going very well. We already had the data centers and we had capacity. So putting in the NVIDIA chips and the GPU sales opportunity was fairly easy and not that expensive for us to get it in. So now it's getting utilization with our customer base, and we do have customers now using it, and I would say it will continue to grow over the next few years. But we're very excited that we're one of the first to have a sole sovereign data center in Canada, allowing data sovereignty for all of our customers, but also being able to be fast out of the gate and offering that GPUs so that organizations can also digitize and become more efficient and effective themselves.
Okay, Doug, thank you very much for joining us today.
Thank you very much. Have a great day.
You too. Doug French is Executive VP and CFO at Telus.